Hey, Alpha fam. Welcome back to another episode of Alpha Commission. Today on Alpha Commission, I just would like to review the macro situation. Now, in light of our pumps on the chart this week, I'm probably not going to do too deep of a dive into the worst case scenario, which I suggested that I would do until maybe we cool off a little bit more. The reason being, I don't want to frighten you guys while we have all of this beautiful green on the charts. I mean, just look at some of these coins. Ethereum Classic pumping 50%, Matic going absolutely nuts on that Disney news with a 60%. And LDO, I don't even know what's going on with LDO, but that thing is just pumping to high heaven. Of course, some of our favorites here, Ethereum, Aave, Arweave, Quant, Sand, Rune, all these guys just pumping AVAX, GMT, right? Ape, just going ape, right? Going crazy in the market. And, all of this was, of course, preluded upon the structure of Bitcoin, which we've been analyzing for the last 3 weeks for potential bullish setups, and it has just paid off incredibly. So let's go ahead and jump over to the S&P heat map where you see that all we have is a sea of green. I mean, this is really looking quite good for crypto to benefit from all of this green on the charts. Now, is this going to last? I don't know. Okay. I think, just if you ask me, that all of these stocks are trying to squeeze out a little bit of a run before they receive some bad news down the line in the form of those earning reports, which are due, uh, you know, later on this week and the next week, and which may be just be kind of a slow bleed on the market, as some of these companies are going to most likely be reporting earnings that fail to meet expectations. Now, that's just a hypothesis because there are two type of earnings that we have to consider. One is backwards looking, right? So like the last 12 months, most of these companies are going to be doing pretty well, or at least okay, right? This year may not have been the easiest year, but they should be okay, right? And then the second thing is the forward looking earnings, right? The projections into the future. Now, that's probably going to take a harder hit than the current earnings, which at least were benefiting from the overheated economy in the past couple years, right? And the last 6 months has really been no exception, except that there has been higher inflation, and that higher inflation can affect the bottom line, but it doesn't necessarily destroy the business model or anything. What could destroy the business model for some of these companies would be the possibility of a recession going forward in the next perhaps 1 year, right? And so that's why all of that data related to the possibility of a recession has not yet been fully absorbed by this market. And if we're going to be talking about a worst case scenario, potentially for crypto, it's going to come in the form of how companies forward looking earnings are going to absorb the impact of a recession that can just destroy the bottom line. So let's jump into it. First of all, I just would like to point out the reason why I'm not going to go too hard on this episode is because, of course, we have been chasing down these pumps ever since 3 weeks ago when I switched from basically this really bearish outlook, right? Risk off, there will be blood, warning, right? All of this stuff, Goblin Town, right? Bear markets, okay? Inflation, warning, okay? So there was a period where I just wanted to make sure that people were very safe, that they were protecting their assets during those downturns, and we did have some dramatic drops on the chart. But then when we looked like we started to be rounding out, started to be bottoming out, right? Then I reminded you guys, you can't be a perma bear. You have to be open-minded to the possibility of relief rallies and upside. And so we got several really good long trades, right? Pumping you up, bullish 4th of July, right? Bullish update, right? We got some success on the bullish trades, right? Got several instances of, four take profits. They actually did work out, even though I was skeptical and analyzed the trades in detail to make sure that everyone was super safe, right? We ended up actually succeeding in all of the trade plans that we presented, right? This one didn't end up needing to be canceled. But had you canceled it, right? This one 8 days ago, had you canceled it with me, that could have been a short, which was a beautiful short, and then the re-entry was perfect for these bullish setups. And of course, now we are where we are. So where are we? Well, we have all that delicious green on the charts, but you can check out my last macro Monday if you'd like to understand the best case scenario for the possibility of this market where perhaps we've bottomed out and maybe we do a double bottom or something and then continue on our merry way, or perhaps we have a relief rally and then complete some type of fifth wave on an Elliott wave that could be anywhere from, a double bottom to perhaps a little bit deeper. But anyway, there's this kind of long-term band of mid-channel support that we could potentially bounce off of, either here, right where we are, right where we've been bouncing off of, or perhaps, one or two levels lower than us, which, yeah, it's going to be a bit of a pinch, but if we bounce from there, it wouldn't be the worst thing in the world. And if we just did sideways, well, you could still be a trader, right? You could still trade the market, and the floor of the market over time rises. And so eventually, even if we went sideways, we would bottom out, and then it would just be up only from there, and most likely the US would be back to money printing and low interest rates, right? And so there is a possible bullish model, bullish in the sense of perhaps sideways for a while, but plenty of relief rallies, plenty of bear market rallies, and the floor will rise to meet us over time. That's the bullish model. That's the best case scenario. We're not talking about shooting up to heaven. That's not the best case scenario, right? There's nothing in this market that makes me think that we're just going to make an all-time high. Now, it could happen. Maybe the war between Russia and Ukraine gets settled. Maybe maybe they compromise on the land grab and the just murderous rampage that Putin has been on. and that just pumps the European economy. It pumps the global economy. It relieves everything in the food markets. It relieves the energy markets, right? The dollar comes down because those currencies it's measured against rise again, like the euro, which has been under tremendous pressure. And then with the dollar coming down, most likely the rest of the market will pump because the dollar, being kind of the safe place to put your money, dollars will then flow into stocks, they will flow into crypto, they will flow all throughout the market. And it could potentially unwind the potential for a recession in the last half of 2022 or perhaps 2023, which could then pump earnings reports, and it could perhaps just put a huge amount of energy back into this market to perhaps be turned around later on for some other crazy reason, right? Like this world, the world never has enough craziness in it, right? We always get some more. If we do just kind of zoom in here, we can see the bullishness on the chart. This is a very bullish pattern. We've been watching it for quite a while now. It's been several weeks. So not much more to say, just that we would like to see it continue, right? And I do have this potential, high target of around 13,000. I don't think we're going to violate 13,000 without something dramatically and systematically changing throughout the entire economy. We can pretty much expect a limit around 13,000 on the NASDAQ 100 mini futures, which of course crypto trades along with very well. And if we have a dump from there, perhaps a double bottom or some crazy drop, right, that brings us to a bottom. But in terms of the worst case scenario, let's take a look at what's possible, right? So we already mentioned, this is, by the way, the S&P 500 mini futures, and I already mentioned the possibility of this Elliott wave, perhaps pumping. For the S&P, that could be somewhere around 4,000, right? And if we got into 4,000, and then we perhaps dropped back down and made a higher low, maybe double bottomed, maybe made a little bit of a lower low. Not really, a big deal because this market could again just go sideways. The S&P also has these mid channels, which for a long time price can just travel along the mid channel. Doesn't mean it won't drop at some point or pump up at some point, but they can travel along these mid channel lines for a very, very long time. And so if we have more or less bottomed out, we could travel along that mid channel, perhaps dropping to the next one lower, but going relatively sideways until the bottom of the chart catches up with us. Very similar to the NASDAQ. All of these indices are going to be, trading relatively similarly. But the worst case scenario here no longer depends on the Fed and inflation. For the most part, inflation has been scored into the market. And the concept that the Fed may increase rates has already been scored into the market. Now, there could be some fine adjustments, like depending on whether we put in a higher low or a double bottom or a lower low, might depend on whether or not the market believes that the Fed needs to do interest rate increases for a longer period of time or at slightly higher numbers than what it's doing right now. Let's say 100 basis points instead of 75 basis points as it was last time. Or perhaps, like 10 increases instead of, say, 5 more increases or whatnot, right? Well, what we can consider is that that's not really the serious issue anymore. The market gets it. We understand. When guys like Sam over at FTX mentioned that the bottom of the market is in, he's pretty much thinking about, interest rates and how the market is scoring in interest rates. But what he's not perhaps thinking about, and what he might be a little bit too young to understand if he hasn't fully analyzed this yet, is just how devastating some of these recessions can be. Okay? Just how terribly devastating they can be, and how deep you can retrace when you've pumped extremely hard. Okay? And then you crash back down during a global recession. So I've done some math here, and this is a bit of a nuanced conversation. We can get into it perhaps on the next Macro Monday. But if we just take a look at what the current P over E ratio is right now for stocks for the S&P 500, then we can consider that we're at approximately a multiple of, let's say, 17x, okay? So this whole area, it's not precise. I'm just eyeballing it, but the math pretty much stands up. This is higher than average historically. Typically, we don't have this high of a multiple. So in some sense, we're still priced very high. And if we have no recession, this pricing area makes a lot of sense. Yeah, we can pump while we're very enthusiastic and kind of grab this kind of 17 to 18x level. But when we're talking about this, stock prices over earnings, we're really also considering future earnings. We're not just talking about past earnings. We're not just talking about the last 12 months, but we also have to talk about the projection for the next 12 months. And if we really do see a recession on the horizon, or potentially a global financial crisis, then these multiplication factors become very important to determining where the bottom of the market could reside. And as the market returns to normal, not these historical highs that we've had like in the 20x area, which was all based upon that kind of a theft by the Federal Reserve during the Trump administration, where they literally stole your money and put a tax on poor people in the middle class and workers in the form of inflation. They put a tax on us so that they could pump money into the pockets of transnational billionaires and all their business buddies and all the institutions that bought up all the stocks. They did buybacks of their own stocks, which used to be illegal until President Bush made it legal again. God knows why. And so these companies, in their infinite wisdom, they used your money, which you're paying for in the form of inflation and recession. Trump gave that benefit to all these companies, which then bought back their own stocks, something that used to be illegal. And so, yes, this was the greatest theft in the history of the world. It was the greatest transfer of wealth from the poor and middle class to the upper class and investor class and the transnational globalist that has ever happened in the history of the world. Thank you, Jerome Powell. Thank you, Donald Trump. Now we're in a system where we're fighting inflation and we're trying to get back to normal, right? You can't just pump the bags of transnational investors forever. At some point, people need to be able to pay for food. And so, as these valuations come down with the possibility of the recession due to what goes up must come down, it's always been the case. It always will be the case. There will always be cycles. These are cycles. They have to return to the mean. There has to be mean reversion. And sometimes the market overshoots on the upside. And when it overshoots on the upside, it most likely will overshoot on the downside. So, what is normal? Normal is actually at the bottom of this chart. You see this nice line right here? That's normal. You move this line up, right? We can waver around in that area, right? Sort of like what we did during the Obama administration. Just kind of, you know, chilled. Nice growth, nice steady growth. Kind of printing a lot here. It's okay. Federal Reserve, what are you doing? COVID? Okay. Oh, okay. We can make a nice. Hey, what are you doing? You're printing too much. Hey, calm down. Why are they still printing? Why are they still printing? Right? Theft. Theft. So you guys, you see, I don't want to underscore it too much. You guys get it, right? You guys get it. You're not stupid. You understand how these circles work. You understand that if the economy, the real economy, is being is taking a hit, under Donald Trump because we've got these lockdowns, we've got these global supply chain shutdowns, the entire economy is turned to trash, and you're just a politician, not your friend, just a politician. If you are a flawed man, not a god king emperor, right? Not one of God's chosen ones. You're just a man, kind of a corrupt man. You're going to push the system to do some kind of weird things. And so instead of pushing the system to do a correction and then chopping along the way healthily, they overshot intentionally to say I've got the greatest economy that has ever existed. There's never existed an economy greater than this one. The numbers on the stocks are so bigly, it's just amazing. There will never be an economy like this again in the history of the world, right? Whatever, man. Like some type of stupid bragging about the stock market as if it's the economy. And so what goes up must come down. And yeah, had we had another 4 years of that bullshit, had we had another 4 years of that crap, maybe we could have just gone to Valhalla, right? Maybe we could have been sitting on some clouds, drinking tea with Jesus, right? And God up in heaven, all high on our stocks. And then maybe we could have had the biggest crash in the history of the universe. And just broken down to absolute hell in perhaps a Great Depression, maybe? Maybe a Great Depression. perhaps. I don't know about you guys, but I thank God that we stopped printing all of that money and that now we're fighting inflation before we turned into some cheap Soviet state where money was absolutely worthless. Nevertheless, normal is here. Normal is this sideways range, maybe a little bit enthusiastic, right? And so the pricing of that in the stock market is going to be approximately this 3,300 to perhaps a 3,600 area for kind of a little bit exciting, right? A little bit excited market. But normal, just regular normal, perhaps 3,000, maybe 3,200 if you can kind of stretch it there. Maybe 2,700 if we're a little bit on the low side. But a 3,200 S&P 500, right? 3,200 would be quite reasonable. Quite reasonable. But the question is, are we going to overshoot? Are we going to have a very serious recession? And if we have a very serious recession, and if it looks like these supply chain issues, just because China's going crazy, they're having bank runs, the war with Russia and Ukraine just escalates, there's no more oil to pump out of Saudi Arabia, right? All this stuff just sticks around, and Europe can't catch its breath. Eurozone has a mega recession. Then the US the US markets are also going to have to price all of that in, and it's going to get overshot, and the housing industry and the banks and all of that stuff are going to get affected down the line. That could be 2023. This stuff takes time. And so I would still expect some type of sideways or perhaps even pump, right? In crypto and the stock market before then. Maybe here, right? But all in all, we'll get some type of relief bounce eventually, some type of relief rally when volatility settles down, which right now is a pretty good time for that. But at some point, all of the chaos will be priced into the price over earnings ratio. And as we return to normal valuations of companies, not this cocaine fueled transnationalist billionaire theft, just drug mania, right, that we had of those 22x evaluations. If we return to the normal baseline of 15 to 16x, then we're talking about some very serious retracement on the stock market. Now, if we have a light recession, then perhaps it's not that bad. And if we're talking about a recession that's going to be avoided and most people just keep their jobs, then perhaps we can actually maintain the middle of this market. And maybe we have reached the bottom. But guys, things are not all well. And while we'll have lulls in this market, we still have many, many systematic problems, and markets tend to overshoot. They overshoot on the upside and they overshoot on the downside. Okay, the evaluations that went into this price, you can tell they were completely irrational. Completely irrational. You know that because it's just literally this top of the market. It's just garbage, pure garbage. Everyone realized, oh, we're wrong. We're really wrong. Same thing can happen down here, only it might happen down here, right? Because if this was the zone that we probably should have been trading in, right, with a kind of enthusiasm, a little bit of cocaine fueled enthusiasm, then this is overshooting to the top side, and this could be overshooting to the downside. It's just what markets do. It's what happened during the virus, right? It's what happened during all of these, crazy drops that have happened in the past. The market freaks out a bit. And so when they freak out, we could see lows that are just unbelievable. And what would some of these lows look like? Well, just to get to normal could be a 30% drop. Bitcoin trades 3x the S&P. So if the S&P 500 drops 30%, you would be talking about a 90% drop on Bitcoin just to get back to normal price over earnings ratios. We maintain some enthusiasm in the market. We're talking about maybe a 20% drop, 10 to 20% drop. That's 20% to 40% drop. No, wait, actually, that's a 30% to 60% drop. This is the S&P. That's a 3x, right? 3x ratio to Bitcoin. So 30% to 60% drop on the Bitcoin price. And if we reach these insane COVID levels, these insane global financial crisis levels, where we get PE ratios of 8x or 13x, and if the stock market gets evaluated that way, you can see this trend line here. Don't tell me this isn't possible. You see this? You're seeing what I'm seeing. That is possible, just like this is possible, right? We could find support on this. But if we have some financial crisis and it ends up being a global financial crisis where the banking systems are having stress, where housing is collapsing, where all of these systems are under serious stress, or God forbid, a nuclear war or something like that, the worst case scenario, we could be talking about 50% down on the markets. And what would that be on Bitcoin? A 3x the S&P 500, that would be 150% down, which is actually impossible. It would be Bitcoin to zero. Now, I would suggest there's a bottom floor on the value of Bitcoin. I would suggest we can probably never go below $1,000 to $5,000, somewhere in that neighborhood, just because there is kind of a religion behind it now, right? That gives it strength, right? Why do you think so many religions were made up in the world, right? If only one religion is right, right? Then why are there so many? Because it gives strength to whatever the community is doing. So they just make stuff up. And so Pastor Sailor out there is constantly spreading the word of Bitcoin. All of these guys who are these Bitcoin maxis are spreading the religion of Bitcoin around the world, and there is a loyal following who will not allow it to go to zero. They'll just buy every single Bitcoin that exists at a certain point. And they have enough money to do that. So, do I think Bitcoin can fall below $1,000 to $5,000? Probably not. Probably not. But do I think that it could get as low as $5,000? Yeah. Yeah. I mean, it is hypothetically scariest situation possible. And we can just visualize that very simply in like the bottom of the trend, like the very bottom of the trend, right? Let's just grab COVID. Let's just say like ultimate crisis levels. And we're talking already about that 5,800 level. Right? Maybe something like this. Could just fine tune it even more. And we could be talking about 5,500 as an ultimate bottom. At some point, all these guys are just going to say, like, that's way too cheap. Now, could you imagine perhaps just this sideways number? Yeah, that's also possible. So can I say that, 4,000 to 3,000 is hypothetically possible? Yeah, maybe these guys are really smart and they see it like plunging down here and it's gonna, everyone's freaking out. All these guys who bought their Bitcoin here, they're freaking out. They want to have a little bit of profit. So maybe we get some crazy, 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 crazy wick. I mean, this has already been tested during the COVID era. So do I really think that's going to happen? No, I don't. It's already been tested, guys. Okay. So when guys like Eric Crown from Crown's Crypto Cave, he mentions that he doesn't believe that Bitcoin will decouple from the stock market if in case something like this happens until he sees it. Um, there's a lot of validity to that. I mean, that's a very intelligent, grounded approach to take. But at the same time, we have to understand that the system has already been stress tested. And the stress test proved that the lowest was approximately 3,900. Okay, approximately 4,000. So do I believe that Bitcoin's going below 4,000? No, and if it does, is it going to really go below 3,000? Almost assuredly not. And then, you look back here and you can just say, look, there's no way in hell, even if we ignore all of this era, right? All of this era, there's no way in hell it's going below $1,000. No way in hell. Okay. So we're talking about the worst case situations. And so what would that look like? What would that look like? Well, let's see here. Do I have an Elliott wave thingy? Let's see. 5 wave. Something like this, right? Maybe something like this. Something truly just terrifying after the next relief rally. Does the relief rally happen here? Or, does this pump fail and does it happen here? Who cares? Okay, do we get a bounce off 14,000 and then a fake out and then in 2023 the world just turns to hell? Something like that. Maybe, maybe. right? I mean, I don't know how you measure this stuff on these weird structures, but we could be getting something like that, right? Again, I always mention I'm not a big fan of Elliott waves, but it does help you kind of visualize, how we can be moving. There's a lot of arbitrary positioning in projecting Elliott waves. Like reviewing it in the past, that's great, perfect. But projecting them, it's very artistic, right? So there you guys have it. We have the Federal Reserve making a decision on interest rates coming up on the 27th, which means that we have approximately a week and a half to pump or to do whatever we want to do in a week and a half while the market just absorbs the information of the PCE reports, the CPI reports, the PPI reports, and then also begins reading the earnings reports. The earnings reports, which will be coming out July 28th, July 26th, July 28th, right? All of these, July 20th for Tesla, July 28th, July 22nd, right? All of these earning reports are due coming up over the next week and a half, right? The next 2 weeks. We're going to get a lot of data to understand how we might project future price over earnings ratios. And while the past ratios may have been very good because of that cocaine-fueled theft by those globalist billionaire transnationalist class, right? Just buying their own stocks back so that they can dump them on your heads at the top of the market, make billions and trillions of dollars of profit, $9 trillion of cocaine fueled Fed money printing. We didn't need that much. We only needed to get out of this hole. We only needed to get out of this hole. This was all theft. All right. This was our projection. Yes, we are now technically in a corrective area. And actually, it should probably be a little bit lower, but the market is getting a bit enthusiastic. And so if we do double bottom or just make a little bit more of a lower low and then continue on our way, that would be the best case scenario in my mind. A little bit of sideways action, maybe a little bit of hiccups, maybe a recession in 2023. All of these things have cycles. We tag the bottom. The Fed starts money printing because we're getting out of a recession. Inflation has been dealt with. The recession took care of inflation. That's what recessions do. Recessions cure inflation. And then the money machine gets turned back on, and we have just a major bull run. Maybe 2024, 2025. Who knows? It depends when these things happen. But again, depending how bad earnings reports are, And depending on how bad a recession can get, the market will overshoot. They will overshoot. They absolutely will overshoot. And anyway, this trend was also fueled by Fed spending. Because let's face it, Obama liked to grease the wheel a little bit as well, right? You had these regular periods of the Fed injecting dollars, of the government money printing. Not enough that like it was just insane theft of basically the entire world, right? In the form of us having to pay back in inflation and in recession. It was just enough to grease the wheels. It was modest. But what we experienced here, while the real economy was being completely molested, all right, while Dr. Anthony Fauci was being put in charge of effectively the American presidency, right, leading the country, President Fauci, right, during the Trump administration, that last year was wild, guys. That was the craziest thing, okay? I've never I couldn't have written some type of apocalyptic novel that was better than the last Trump year, okay? Like that was some psycho level, right? I mean, you have to forgive the evangelicals for believing that Trump is basically the Antichrist leading in the end times, which was going to then allow everyone to basically, basically just float away to heaven or whatnot, at the apocalypse. But yeah, sorry to mention he was but only a man. He was only a transnationalist, globalist, billionaire class man with lots of friends in business who bought their stocks back and didn't have to pay back a single penny of debt to the US government while they took trillions and trillions and trillions of dollars in effectively free loans and extended those loans to each other. That's the important part that people don't understand. The money supply increases not just from Fed spending, not just from money printing, all right, not just from the treasury spending, but from businesses extending loans to one another. That increases the money supply. And so what we see happening at the Fed is only a fraction of it. That low interest rate, having that interest rate near zero, allows businesses and banks to extend infinite loans, infinite money, which businesses then extend to each other. And since it's free money, they just spread it everywhere. They buy everything, and the billionaires give loans to billionaires, give loans to billionaires, give loans to billionaires, and they don't spread it down. It spreads up only. And when it comes time to pay for all of that, They have their 0% loans locked in, and so, maybe they just cut it off or don't make any new loans. And yeah, they pay for inflation as well, but they made hundreds of millions and billions and overall trillions of dollars on those deals, and so they can easily accept inflation. But the poor people and the middle class, they can't do that. They couldn't even get a loan during those times. And that's how the ultra wealthy, which I'd love to be. I'm just telling you how it works. Okay? I'd love to be one of them. But I'm telling you honestly how it works so that you don't idealize these monsters, right? You don't idolize these lizard people who engineer apocalyptic end time scenarios for humanity so that they can have larger estates. They don't give a crap how much inflation or how much recession comes along, because if they made their money on the upside, then the best scenario for them is a deep downside. That is the best scenario for them, because then they swoop in and they buy everything. Everything. They buy it all. Everything. And then the recession is magically cured. I mean, inflation is magically cured by recessions. That's how it works. And the money printing, the low interest rates get turned back on, and the ultra rich make their money again. Now, it's not usually as perverse as this was, but it's usually pretty bad anyway. Okay? This was just filthy. This was filthy. This was a billionaire dildo just slapped across your face. I swear, guys, they're gonna do it again. They're gonna do it again. If you let the same people in power, they're gonna do it again. And America is just going to break. The dollar is going to break. The system is going to break, because if you don't care about those things, you don't care if they break. Just watch out. So that was a little bit more negative than the last Macro Monday, as it should be, because I'm presenting the worst case scenario. And so the worst case scenario entails truths of all of those things, but it isn't on its own the truth, right? The truth is always in the middle somewhere. And so we'll have to find out how this all gets negotiated politically, economically, socially, right? And even religiously, frankly. There is a lot of faith that goes into all of these systems. And it's important not to break that faith or they collapse. And that broken faith can collapse very, very quickly, especially under fear, especially under crisis. So just keep your eye on the PE ratios, price over earnings ratios. Not just the backward looking ones, not just the last 12 months, but the projections for the next 12 months. And as they evolve, quarter by quarter, month by month, we'll see how the stock market gets evaluated. And that could determine if crypto has really bottomed or if crypto has only just begun to bottom. All right, guys, a little bit of a hot take there, but that was your alpha for the day. Stay safe and happy trading.